Would you rather have $1 million today or a penny that doubles every day for 30 days?
You know what I love? Compound interest. I'm going to show you why, because the math is going to blow your mind.
Let me show you what the numbers are when they compound. Averaging out 70 times, $1.8 million. All you put in was 28,000.
Wait, is this even real? No video on YouTube gonna make you millionaire, except the video you are watching it right now. Just kidding. So basically what we are going to understand today is, I go through a lot of internet research and the videos of the gurus who say a lot of concepts on how money works, how you can become a millionaire overnight, or how how the discipline with time can create a generational wealth. We're gonna talk about all those concepts and are those gurus actually real? Even I am not a financial advisor. I don't have a finance degree, or even I don't have any sort of certifications on finance. I'm just trying to go through the theories that I learned from my childhood. So you see, starting of the video, there is concept of compound interest. You have learned those concepts in grade 5 or 6. So does that compound interest still works when you are in a university graduate, or when you are 40 years old, 50 years old? Does the same concepts that you study in your school still works? Are those concepts validated? What do you think? So I did a lot of research on those part and come up with this video with no edits, no videos, no cinematic background or nothing like that. I just want to test out those things, those concepts that we studied in our childhood. So that's the reason I'm creating this video. So this video will not generate $1 million by tomorrow, or next year, or the next whatever. I can say a decade. It doesn't create $1 million overnight. I can say that, but at least this video can set up the root. So basically we are discussing about the concepts, simple interest, compound interest, and their differences, how the compound interest works. And you have seen a lot of things going on around Snowball effect, compound interest, what is the other thing, systematic investment plan. You have seen that, right? You see a lot of YouTubers saying S&P 500. You should have put money 10 years ago in S&P 500. You will have this much amount. You should have put this amount of dollars on Google, Meta, or something like that. You will have this much amount today, right? So all those concepts that we're gonna clear this out today. Not today, maybe from this experiment. I'm a financial advisor, I say. So from this experiment gonna go long term. So it's not just a 1 day or 2 day experiment. I'm making this video so that the next generations, the upcoming generations, will actually know whether the theory and the practical meets each other to generate a generational wealth. So basically that's the reason I'm creating this video today. So you might have a feeling like, where should I invest? What sort of stocks I choose? Where should I do a systematic investment plan? If you need a detailed video on systematic investment plan, compound interest, or snowball effect, or what are the account types, where can I open an account, you can just comment down below and I will come up with a new video. So I can come up with a new video because I already said that I don't have a financial degrees or neither a financial advisor. I'm just a learner like you guys who want to make money. Maybe not. I have been investing for a couple of years now, but I think this video will genuinely inspire people who wants to actually start something small. I'm not talking about you put a 100,000 on something, you put a 1,000 on something, even 1,000 on something. I'm just trying to say even starting from $10, $20, or $50 a week, bi-weekly or monthly. It's up to you how you want to join me throughout this journey. So basically what I'm planning to do is let's run a $100 experiment a week. It's not a fake money, it's a real money with a real system and on a real stocks or ETFs, or we can figure this out in a later video. So I did, as I said, that I did a lot of research on this concept, how the systematic investment plan works, how the compound interest works. So to do that, I figured out a couple of ETFs. When you talk about the long-term investment, ETFs are the best possible opportunities in the market. Instead of going to the one stocks, instead of putting all the eggs in the one basket, you can invest on multiple areas, right? So there are it depends on countries, but there are tracking. It depends on countries now. Right now, I'm in Canada, so basically, I figure out few of it. I'm not putting all basket, even in ETFs. I'm not putting all money in one ETF. I figure out couple or three ETFs to invest on. So based on my research, if you need a detailed video on how to find right ETFs for you to invest, you can again comment down below, and I will come up with a new video. So basically, all those kinds of concepts I can come up with a new video. This is the new channel, so whatever you need, just comment down below, and I'll come up with a really nice video. If you want editing cinematic kind of videos, I can come up with that videos as well, if you don't need a raw video like this. So this is just the intro, so that's the reason I'm just completely making this video raw, so that people will understand I'm not hiding anything or selling anything to them. So not this video is sponsored by anyone, so that's the reason. So even if I can start with pretty much basics, I don't have understanding. I do have a couple of brokers account over here, but for this experiment, I'm going through the totally new brokers. I did that couple of hours of research as well. Not a couple of hours, I can say more than that, let's say. Yeah, so I did a research as well, and trying to figure out does the recurring investment have their charges, or those kinds of things as well comes up there. So talking about taking all these things on considerations, on all these things in mind. So I come up with a new video, figure out with a new platform. So let's say we're gonna set up this account, and before that, I just want to show if I invest $100 a week on this particular ETFs, assuming I don't know 8 to 10% of return for next 15 to 20 to 25 or even 35 years, how much this gonna return, assuming that around 8 to 10% on a regular interval. How does this formula actually work? I'm gonna show you that. Let me just open the chat GPT for you, and we can start from here. So now, yeah, I have my chat GPT ready with me. So before that, I want to clarify you few of the concepts on what ETFs I'm gonna doing this experiments on. So I found out three ETFs. One is VFB, which tracks the S&P 500. You have heard that S&P 500 a lot of time, right? So yeah, which tracks the S&P 500 indices in Canada. I have one more called QQC, which tracks the NASDAQ 100 indexes, which primarily consist of high performing stocks of United States, and more of them comprise of tech stocks, so it's kind of more volatile. And the other one is XEQT. So again, in the previous section as well, I said to you that don't put all eggs on the one basket, right? So that's the reason I'm choosing this stock, so that I'm not investing on the US stocks primarily. So I'm investing on global stocks through the XEQT. So XEQT normally consists of around 9,500 global stocks. So in that case, they have around 40% of US stocks, 25% of Canadian stocks, and rest of them from the emerging and developed countries stocks. So basically, I have selected all these three stocks. So if you want a deep dive understanding of what those ETFs are actually, so let me show you. Let me open ChatGPT and show you how this goes. So let me type in what are the ETF, XEQT, PFP, and QQC. What are their returns over the years? So you can see here So XQT, as I already mentioned, that it's a global ETF. It has like 100% stocks. Now bonds are nothing like that. So it's considered 45%, around 45% of the US stocks, 25% of the Canadian stocks, 25% international like Europe and Asia, stocks from US, Europe and Asia, and 5% from the emerging markets. So in this case, you are investing like in globally, not just in one country or other countries. You are investing in a global market. So the next thing, when you go to returns, so basically it has a long-term growth diversifications, and it hasn't given me the actual return on percentage since it has, okay, here it has given the total return. So since it's started, it has given around 8 to 9% annual returns. So that's quite like pretty much good returns when you compare it in a long-term basis. So we have also assumed that 8 to 10% on the market return. So that's a pretty much good idea to invest on this ETF. And the other thing is, other one is Vanguard. As I mentioned, that it tracks the S&P 500 ETF. So it's basically it tracks in Canada. So it's normally like you hold the assets on Canadian dollars. So it means like if you are in the US, you invest on S&P 500 directly, but here in Canada, you will be investing in VFB, which is Vanguard S&P 500 ETF. So through the Canadian dollars, not actually the US dollars. So that's just the difference. Other than that, like if the S&P 500 grows, the VFB also grows, and similar like that, it tracks. So basically, so it consists of top 500 US companies. You can say that Apple, Microsoft, Amazon. So these are the big players in the market. So it consists of all those players. And the other one is the QQC, which is the Invesco Nasdaq 100 ETF. So it tracks the Nasdaq 100 ETFs, which is like, as I mentioned, that it's two volatile ETFs. So the reason behind choosing this ETF is like, I don't want to be like slow growth, or like you need to be at least excited, right, when you invest. So that's the reason, one of the reason I chose QQC as well, because it's volatile. So there is a high risk and high reward as well. So instead of just putting all things like in BFP or XCQT, it's a slow growth, but it's a steady growth. So in between the experiment, I want to test out some of the QQC, test out the things on QQC as well. That's the only reason we can grow our portfolio as well, because you can't be always slow. Sometimes you need to be like a little bit volatile, right, based on the market condition. So that's the reason I chose QQC. And looking at their year returns, so BFP have around 10 to 12% return. So it's more than the expected returns that we are expecting right now. And QQC has also around 15 to 18%. As I mentioned, that is really volatile, right? There is a earning opportunity as well, and there might be sometimes a risk as well. So that's the reason it has 15 to 18%, and it will definitely help us in our portfolio as well. Instead of just being a slow growth, we can go a little bit fast if we combine with QQC. So yeah, these are the ETFs that we talk about. So now I want to actually show you about the real numbers, how the numbers will go. And let's say split the portfolio. So yeah, I'm not putting all the money on one ETF. Instead, I am dividing those like in a part. Let's say out of 100%, we will be investing around 50% on PRP, 30% on QQC, and 20% on XCQT. So in that way, we will have 100% of our portfolio with $100 a week. So basically, I'm planning to divide that way to see like how actually it's gonna work. Maybe in between the experiment after a couple of years or something like that, we can again rearrange those things if we want. That's the reason as well. Or maybe we can let it grow. And apart from that, I do have a plan to increase the portfolio weight, like investment weight, by 10% each year, to see like, so that this experiment goes again, like this experiment feels really interesting in the future as well if we increase by 10% each year. So let's see the real numbers, how it's gonna work, and actually how the compound interest formula actually works with all these concepts through the chat GPT. Let's say so let me say like I am planning to invest $100 a week, $100 a week for next, let's say now I am 27, so I can say around till 50, 52, which will be around 25 years. Let's say we can go with 25 years window, right? 25 years, okay. With, let's say I am going with the bare minimum or maximum, I can say. We can go with the bare minimum as well, because the markets, today's market is like more into tech, right? Everything is growing rapidly, so every day something is gonna change, something is new, innovation is happening day by day, right? So I can say that with that in potential, looking at the global markets as well, with demand and supply. So let's say we can say around 10% return, 10% return, annual return, okay, 10% annual return, and I'm splitting those things, right? So 30%, 50% of amount on PFP, 30% on QQC, and then 20% on XEQT. So let me see, can give me the exact numbers here. In a tabular format. So now here we got the table, right? So I can see here, like year one, we will be investing $5,200. So this is the total investment amount, and total value will be around, with the 10% return, it will be $520, right, in the first year. So when you go for like fifth year, fifth, we will be investing same amount. Investment amount will be same if we don't increase by 10% each year, right? So this is the scenario one. We are going to invest without increasing the 10%. So this is the numbers that we will get if we don't increase by 10%. So we will see that concept as well, how powerful it is if we increase this investment amount by 10% each year. So let me see the numbers here. So year one, $520 return. So year five, with the same investment, with like 52, you can add up the things. Year five, we will have 3,175. With time, you can see here, with time, even in 5 year, fifth year, $520. And we have invested a little amount of money here till 5 years, but at the end, when you go to the 25 year, so maybe you don't need to go to 25 years, so you can see the money getting doubled on a few years. You can see after the year, so when you hit 100k here, so basically you will be investing, total investment amount will be 57,200 by the year 11, and you will hit 100k. So basically this is the return. So 57,200 turned into the 100k by year 11, right? So year 11, your 57,200 investment will be turned to 1,105,000, right? So now what I want to show you that is like, when will the money will double? Like double, I mean like with 100k, each 100k, when will the money will be double in years, in each 100k, and how much years it will take? So let's see, when you come here, 200k. So in year 16, I mean from year 11, you can see $100, 100k. So it takes 1, 2, 3, 4, 5, 6 years to become 200k, right? With the same investment amount, 5,200 per year. It takes 6 years to convert 100k to 200k. So for next 300k, let's say, so for 300k it will turn to 1, 2, 3, 4, 5, 4 years, just 4 years. So here what we saw was 1, 2, 3, 4, 5, 6 years. Now we can only see 3 years. Just 1 to 3. 200k, 200. List this is 1, 2, 3. Just 3 years, your 200k will turn into 300k. So 300k to 400k, just 2 years. Let's say 2 years, then you're going to go 400k, then 400k to 500k, just in 2 years again. 1 more 2 years, and you'll be in 500k range. But you are investing the same amount each year. Just we are assuming 10%. Nothing is increased per year. Investment amount stays the same, but your return is doubling. You can say like 100k, not doubling actually. It's increased by 100k within a year. So you can say 500 to 562. So maybe let's say if you project for next 10 years, the money started doubling in 6 months. I mean, not in doubling, but in earnings of 100k each 6 months. So that's the dreams of for like people like you and me, right? To getting 100k, which is quite a lot of amount of money, right? So each 6 months. Then when you go in a long term, more in a long term, but you are just investing 5,200 a month, 5,200 a year, you can understand the formula now. So this is how it works, compound interest. So in this, like looking at this formula and these things, people tend to send a lot of courses, a lot of YouTube videos, a lot of things. I mean books and everything like that. So this is the simple basic concepts, how it is working, how systematic plan is working. So you and me, every one of us knows this formula, right? The only thing is how you invest yourself, how much you will be confident, how much you will be consistent, how much you will be disciplined over the years. So that you can make a wealth in a long term, right? So that's the thing. So other than that, I said like if we increase by 10% each year, how much will it's gonna be? So let's say what if I increase my investment by 10% each year? 10% growth each year with 10% increase in investment, with 10% increase my investment with 10% annually. Displaying table. So let's see here what is the results looks like. Is this surprising? Is this normal? Or I don't know. Let's see the math. So we can see here. So initially we were investing, like look at this invested year, we were investing 5,200 each year, you can see. But now investment amount grows each year, right? So if I increase the investment by 10%, our investment by the end of 25th year will be 51,219 per year. So, and this is a lot of money, right? So, but over the years, if you get a good return, that amount is nothing, because that money is getting you to this much. Like your final value will be 562k without increasing anything. But when you increase 10%, your value will be $1.4 billion. This is how math works, which is like 2.5 times more wealth than without increasing, just consistently investing the same amount of money, right? So this is how it works. I will simply show you here as well. So in the first year you invested this much amount, you will be $520. Same thing for the first year, second year. So from second year the numbers get changing, right? 1,000 here to 1,100 here. So numbers gets changing, right? So this is how much returns you will get each year. So this is the last year return. If you invest 51,200, you will get 120,000. One is doubling, right? One is doubling in an interval, just 1 year. So this is the power of compound interest, and this is how compound interest work. Now we have the numbers, right? Now it's time to choose our broker. So to do that, I have been using Wealthsimple for quite a long time now. It's almost 2.5 years. So, and I feel like these are like they are like pretty much good brokers, I guess. So in terms of comparing with fees, recurring fees on purchases, and all sort of other investment or trading kind of stuff, they are really good. So what I feel is like when you buy a fraction of shares or ETFs, like in this case, in this experiment, we are investing like $20, $30 on a ETF, right? We are not purchasing a whole ETF. So that's the reason they like in that case they don't charge anything from us. So it's completely free to purchase a fraction of shares. So there are other platforms as well, like you can say Trade. There is a platform called Trade, but in that case, in that platforms, you can't buy a fraction of shares. You just need to purchase a whole share of there. So yeah, in this experiment is pretty much straightforward. So in this case, so we are simply going with the Wealthsimple because I have already mentioned that I have been using it for quite a long time, and I feel like this is a good platform, and this is a go-to platform for the beginners as well. It's super simple. Like it has a mobile app, you can invest through the web as well if you like, and yeah, maybe we can start right away. Like we can simply account opening an account with them. So again, there are a lot of account types that's involved. You can say TFSA, FSA, or RRSP, or there are all other sort of accounts as well. In this experiment, we're going to use the TFSA account. So if you don't know about TFSA or FSA or RRSP, in what cases we're going to use those, and what cases they're going to benefit us, and to know all those sort of concepts, maybe I can come up with a new video on that, because this video is already long, and I feel like just in this video we're gonna set up an account, set up our automatic payments, and then we set up our recurring payments as well. And yeah, that's pretty much straightforward, right? So let me start with sharing my screen so that you both of us can walk through. So now I have successfully logged in my Wealthsimple account. So you can see here I have a couple of investment running in my Wealthsimple account, as I mentioned that. And for this experiment, I'm gonna open a new TFS account, so which is tax-free saving account. So whatever the things that you invest on it, it has a limit though. But whatever the things that you invest on TFSA, there is a like tax benefit. You don't need to pay any sort of taxes on that account. So you will get around $7,000 dollars of room each year in a TFSA account. So it changes. Like previously it used to be 6,500, then now like recent years it's 7,000. So maybe if you want detailed videos, yeah, we can talk on that concept as well. So for now, I just need to quickly set up an account, and from there we can start our journey. So for that, let me simply add an account from here. So there are a lot of account options. You have like tax-free saving account, which is basically a tax-free investment. You don't need to pay taxes on this account. It's super crazy, right? Yeah. So there are non-registered accounts, RESPs, RRSPs. Yeah, they are the difference between RESP and RSP as well. So if you want that, we can discuss that in future videos as well. So, and there is non-registered margin accounts. Yeah, it's like checking account. It's like simply a bank account. You can simply you can have a debit card as well. It simply works like bank accounts, like the accounts that's in Scotia Bank, CIBC Bank, RBC Bank, or similar to other banks that you see. Yeah, for this video we're gonna open a TFS account. So let me quickly set up a TFS account. So it's a self-directing investment account we're gonna open. So you can open a portfolio management and those kinds of things as well. I'm not going with that. So today we're gonna open a TFS account. This is simple, our experiment account. So there is an agreement. I have to confirm that. You can always go through the agreement, right? So there might be a lot of things that's going inside the agreement. You should be careful about that. So yeah, we have opened our new TFS account. So basically I already had a one TFS account, but this will be the different, like the other TFS account, you can have a multiple TFS account, but the limits will be the same, right? So you need to be careful on that things. So now let me simply add the money. So I already have $100 here on my checking account, so I can simply fund it to my TFS account from my checking account. So this will be instant deposit. So let me $100. So it's just a one-time investment, and submit this. Now we have $100 in our account. Now let me simply set up our investment. So to do that, so you can see all the watch list that I have added over here. You can see. So as I earlier mentioned that, so you're gonna invest $100 a week. Out of that, $50 on BFP, $30 on QQC, and $20 on XAQT. So to diversify our portfolio and see how real experiments works. It's better idea to invest on one assets as well, because when you see like someone is giving 2% or 3% returns, you will get $3 out of 100, right, on one stocks. But to all these stocks, all ETFs or stocks or equities or anything what you call doesn't perform well, so there will be not that much of amount of profit in that case. But for this one, what I am doing is not putting all eggs in the one basket, as I already mentioned that. So that's the simple strategy. Okay, so basically, so from like I already contributed $300 this year, like starting from January 1 to December 2026. So this is just July. So I think I have pretty much like couple of thousands, I guess around 25,000 dollars of room available in my TFSA. So it will not be a big problem for me. So for this experiment, because we are not going beyond limit in this case. So now simply I have these stocks ETF. So QQC, this is the QQC. It's current market rate is 43.39 Canadian dollars. So you can see how it has grown since it started. So you can see it started on 2021, $19. Since then it's on all-time high, I guess, right? So around 43.39. So in this case, we are going to buy a market rate, and we are buying in dollars. So this will be, as I mentioned, QQC, $30 a week. So which is equal to 0.69 shares. Next, and maybe I have to queue the order because today is Saturday, so market is closed. Instead of doing that, maybe it's okay. So the order will be purchased on April 18, 20. So it will be executed on 20. So let me buy $30 worth of shares. So let me queue this order. Okay, the order has been queued. And the next thing is, let me simply go back. And this is my TFSA, one TFSA, and this is the recently TFSA. This one is my original one, and this is the one I recently opened. So we have $70 cash remaining. So for that, let me invest. How much we say, like $20, right? 20, 30, and $50. Yeah, $20. $20 on XEQT. So on the market buy rates, let me in dollars, $20, which is like 0.46 worth of shares. So this order will also be queued. So this is done. Next thing, you can go for the advanced option here as well. You can see daily, weekly, monthly, 3-month charts. We're going to talk about those things as well, because we're talking about the trading and all kinds of things. If you want a video on technical analysis as well, I can come with that as well. So like everything, these things gonna come in the future videos as well. So we are not going to cover everything in one video. That's the reason. So we have QQC, XAQT, and PFP. Now PFP Vanguard. So we are simply gonna buy $50 worth of share. This BFB, which is like current rate is 172.99. So $50 worth of shares. So $50. So this will be from our TFSA account, which we recently created, right? Where's it? Market buy, estimated shares. So from our TFSA account, this is the default. So this is the one that we have, $50 remaining. So from here, I'm gonna buy $50 worth of share each week. So this is the keyword order, right? Now you can see here simply. So when you go to the dashboard and when you go to your TFS account, we have the 3 orders pending. Now we have our ETFs ready with us, right? So we have purchase. We have set up a purchase for PFP, XQT, and QQC in total, which is like $50, $20, and $30, equivalent to $100. So now what we're gonna do is set up a schedule payment. So for that, we don't have that features on the way. So to that, we simply need to open our mobile app. So basically it is easy to do with the mobile app. So for that, simply I'm gonna close my phone from here and open in my laptop. So now we have successfully logged in our account. So do a recurring payment. This is our account, right? This is $100 for TFSA. So let me simply set up a recurring payment for this one. So this order has been already initiated. So there is automation features you can see here. So this the recurring investment is currently turned off. So you definitely need to create a recurring investment over here. Before that, what you have to do is dividend reinvestment. You have to turn this feature on so that you can always reinvest your dividends on the same ETFs that you gain. And yeah, set up a recurring payment. So let me select our percentage VIP. This is Toronto Stock Exchange VIP. This is what we are buying using our TFSA. So this is our TFSA that we created. So right now we don't have a account, so we'll be investing from checking account. So this is the backup payment option. So let's say we are investing $50, right? $50 a month. $50 a week. So it's starting from day, what is called, let's say today is April 9, 18. So today is April 18. So it's starting from we already have a purchase on this week, so maybe let's do 28. So what I'm gonna do is like 7, 14, 21, and 28. So I just want to show you how we can purchase on a Wealthsimple. That's why I set up the current purchase order over there. But this time, from next time, we'll be purchasing on 7, 14, 21, and 28. That will be better. So on 28th, so this is frequency is weekly. And yeah, from the checking account, this is the source where we will be funding our account. We just have a $0.33 on our checking account, so maybe I'll fund that account as well. And you always say here recurring. This is the recurring automation. So yeah, $50 worth, and simply need to review and let's confirm. So recurring investment plan of $50 worth of PFB is scheduled to be placed on April 28th. So this is done. So next thing is QQC. Same thing for the QQC. Let me quickly set up for that as well. So this is our purchase and this is our TFS account. Dividend investment. Yeah, this is the current order from TFSA. This is our TFSA account. Recurring buy. which is a coin like $20. How many? It's $30, right? $30. Same thing. 27, I guess 27 that we put. And this weekly, and the funding source will be our checking account. So alternate payment method is that, and the TFSA account weekly. So yeah, for this one we have set up this. And again, so for XEQT, same process. I'm gonna trade this by XEQT, amount of $20. The start date will be 27th, and our account will be checking account. We simply review and confirm. Yeah, we have successfully set up our recurring payments as well. Now you can see it here, like recurring payment has been set up for these accounts. So yeah, that's all for this video, I guess. So yeah, our portfolio, our account is ready. So we are investing on this account, TFSA. So, or let me simply rename this account to our experimentation account, TFSA Snowball effect experiment. So I can type in all, let me say like 25 characters only. So okay, yeah, this is our TFSA Snowball effect experiment. So yeah, this is all for the video. And if you have any doubt, if you have any sort of like questions to ask, you can simply comment down below. Or if you need any sort of videos on the topic of finance, primarily in personal finance, AI, or trading, investing, any kind of things, just comment down below and I will come up with a new video. Or you can simply reach me out through my email, phone, or my social media, which is included in my video descriptions as well, or in my YouTube descriptions as well. So yeah, that's all in for this today video, and see you in the next video. So I'm not going to say that you subscribe my YouTube channel, or if you simply like a video, you can subscribe, or if you don't like, I can come up with a new video. And yeah, I'm pretty much sure like next time you're gonna like it. Bye. Peace.